ReNew Energy just dropped its Q4 Fiscal 2026 earnings, and if you're following India's renewable energy boom, this is one report you cannot afford to skip. We're talking record profits, a pipeline pushing past 26 gigawatts, and a manufacturing bet that could reshape the entire solar supply chain. Stay with me, because I'm counting down the 10 biggest takeaways from this call, starting at number 10 and building all the way to the most important story of this earnings season. Coming in at number 10 is a risk investors need to watch closely: grid curtailment. India's transmission infrastructure hasn't kept pace with the explosive growth in renewable installations, and that mismatch hit ReNew's solar projects particularly hard in Rajasthan. Management was upfront that while curtailment eased in Q4, it remains a headwind expected to drag on results, especially in the first half of fiscal 2027. It's a real constraint on an otherwise booming sector, and one worth monitoring carefully. At number 9, ReNew delivered an ESG triple crown that puts it at the very top of the global sustainability rankings. The company earned an MSCI AAA rating, the highest possible, placing it in the top 19.5% of utilities worldwide and making it the highest-rated energy utility in all of India. Add in a top 10% S&P Global CSA score of 84 and a second consecutive CDP rating, and ReNew is making a strong case that clean energy and best-in-class governance go hand in hand. Number 8 is the fiscal 2027 guidance, and the numbers are encouraging. Management is targeting adjusted EBITDA of 103 billion Indian rupees to 109 billion Indian rupees, roughly a 17% step up from last year's guidance range. Cash flow to equity is expected to come in between 18 billion Indian rupees and 22 billion Indian rupees, with construction of 1.6 to 2.4 gigawatts planned for the year. It's a confident outlook that signals management believes the growth engine is well and truly running. At number 7, ReNew's commercial and industrial business is turning into a genuine powerhouse. The C&I platform now stands at 2.7 gigawatts, with 2.2 gigawatts already commissioned, and nearly half of contracted capacity is locked in with global technology giants and hyperscalers, the companies powering the AI and data center revolution. ReNew also closed a fresh $95 million raise for an 11.3% stake in this platform, underscoring just how much appetite institutional investors have for this fast-growing segment. Number 6 covers balance sheet discipline and debt management, a story that keeps getting better. ReNew cut its net debt-to-EBITDA ratio by 1.1 turns year-on-year, and with 90% of foreign currency principal fully hedged, the company is well insulated from rupee volatility. On the refinancing front, management has already secured $400 million in commitments against the $1 billion in bond maturities due in the first half of calendar 2027, providing solid near-term visibility. At number 5, the manufacturing business is no longer just a strategic hedge, it's a major earnings contributor. ReNew's integrated solar manufacturing operations delivered 14.8 billion Indian rupees to consolidated adjusted EBITDA in fiscal 2026, representing roughly 15% of the total. The company has invested around $80 million in this business and attracted $100 million from BII for approximately a 6% stake. With domestic cell supply tight and government policy mandating local sourcing, ReNew's manufacturing arm is both protecting margins and generating real cash. Number 4 is the scale of ReNew's committed pipeline, which is simply staggering. The total committed portfolio now stands at 20.2 gigawatts, including 1.7 gigawatts of battery storage, while the broader pipeline, including 1 auctions, exceeds 26 gigawatts. To put that in perspective, this pipeline is up more than 2.6 times since the company listed in August 2021. That's the kind of growth that signals ReNew is playing for long-term market leadership, not just near-term quarterly wins. At number 3, ReNew set a new construction record in fiscal 2026, commissioning 2.4 gigawatts of renewable capacity across the year, its highest-ever annual build. That included over 1.7 gigawatts of solar and 600 megawatts of wind. The operating portfolio now sits at approximately 12.8 gigawatts, reflecting 25% year-on-year growth after adjusting for asset sales. Consistent execution at this scale is a genuine competitive advantage, and management signaled that battery storage deployment will accelerate from here. Coming in at number 2 is a bold manufacturing expansion that could define ReNew's next chapter. The company has announced a new 6.5 gigawatt ingot and wafer facility, a 42 billion Indian rupees investment that will deepen its backward integration all the way to the upstream solar supply chain. The plant is targeted for commissioning around June 2028, with meaningful EBITDA contribution expected in fiscal 2029. Importantly, management plans to fund this through a mix of project debt, internal cash from manufacturing business itself, and an external fundraise, keeping it off the parent balance sheet. And the number one takeaway from ReNew's Q4 Fiscal 2026 earnings call? Record profitability, full stop. Profit after tax surged 2.3 times to 10.4 billion Indian rupees, the company's highest ever annual profit, and its third consecutive year in the black. Adjusted EBITDA reached 98.5 billion Indian rupees, beating the top end of management's own guidance, while cash flow to equity grew 45% to 21.6 billion Indian rupees. With leverage falling, receivables improving after a Supreme Court ruling in their favor, and a 26-gigawatt pipeline ready to fuel future growth, ReNew is firing on all cylinders. This is a company that has turned the corner, and the best may still be ahead. If you found this video helpful, don't forget to subscribe for more earnings analysis from Earnings Central.